So here I want to talk about question number 4 in the first homework 1. So this question basically requires our familiarity with the fundamental structures of a balance sheet and income statement, and also asks us to calculate the cash flow from assets, or what we call the free cash flow. So in order to better solve this question, let me first copy the setup to the OneNote, which I will be using to as my scratch paper, basically, to solve this question. So first, if you if you go back to the setup, basically what's provided is this firm's balance sheet and income statement, and we have 2 years, basically 2 years balance sheet, 2010 and 2011. Again, this year here means it's a particular date, because we know that the balance sheet represents the snapshot of a firm's financial position. But if you look at the balance sheet, you can see that because we know that the balance sheet on the left hand side we have the assets, and assets further has current assets and fixed assets, and on the right hand side we have the liabilities and owner's equity. So what's missing from the balance sheet is the owner's equity. So we have the current liabilities and long-term debt. And actually part A of this question asks us what is the owner's equity for these 2 years. So that's the first part. We need to figure out the missing part of the balance sheet. So how can we figure out the missing part? We know that every balance sheet has to be balanced, right? That's basically what this balance sheet means. So if I write down right here, part A. So balance sheet identity, in other words, it has to be satisfied. That means total assets has to equal total liabilities plus owner's equity. And from the total assets, we know that it further equals current assets plus net fixed assets. So that's basically the total assets. That's my left hand side. And the right hand side, the total liabilities, that further equals current liabilities plus long-term debt, and then equity. So now current assets and net fixed assets, they are both given by this balance sheet, and current liabilities and long-term debt, they are also given. So from this equation, we can solve out equity. So equity equals current assets plus net fixed assets minus current liabilities minus long-term debt. And this, now we can plug in the numbers for different years. So equity for 2010, plug in the numbers for 2010. Current assets for 2010, that's 920. And net fixed assets for 2010, that's 3,857. And current liabilities for 2010, that's 365. And long-term debt for 2010, that's 2,000. So then we can pull out our calculator and figure out the answer. 920 plus 3,857 57 minus 365 minus 2000 equals. That gives me 2412. And similarly, we can also get equity for 2011. Just plug in different numbers. 1005, that's the current assets. And long-term net fixed assets, that's 4548. And current liabilities, that's 413. And long-term debt, that's 2132. So then plugging these numbers into my calculator, that's gonna be 1005 plus 4548 minus 413 minus 2132. That equals 3008. So now let's get these numbers back to connect. So the first number is a 2412. And second number is a 3008. Okay, so that's part A. And part B, what is the change in net working capital for 2011? So to calculate the change on net working capital, we first have to know the definition of net working capital, right? Net working capital means current assets minus current liabilities. Hence, the change on net working capital for 2011, that's basically net working capital for 2011 minus net working capital for 2010. So then we just need to calculate 2 years number and then do the difference. So net working capital for 2011, that's gonna be current assets 2011 minus current liabilities for 2011. So that gives me current assets for 2011, that's a 1005. That's current assets, and current liabilities, that's 413. If you go back to the balance sheet, you can see it's 1005 and 413. Okay, so now since the calculation is very simple, so I don't even need a calculator, I can just do it on my head. So that's gonna be 2, 9, 5. So it's 592. The same for net working capital for 2010. That's gonna be current assets for 2010 minus current liabilities for 2010, and that further equals 920 minus 365. If you go back to the balance sheet, that's 920 minus 365. Okay, so again, this is very simple, so I don't even need a calculator. So that gives me 5 and 5 and 5. So I have 3 fives. And then the change our net working capital for 2011. That equals net working capital at 2011, the level, minus net working capital for 2010, the level. So that gives me 7, 3. So basically 37. So now let me put this number back to connect, 37. So that's the first two parts. And part C. Part C further have two parts. Part C1. In 2011, Parent Enterprises purchased $1810 in new fixed assets. How much in fixed assets did Parent Enterprises sell? So if we know how much this firm sold in that year, 2011, we can basically figure out how much in net the firm purchased, right? Because the setup tells us how much the firm purchased in new fixed assets. So if we further know that how much the firm sold in that particular year, we can get a net purchase. And basically the net purchase is what we call the net capital spending. So you see that's one way to get a net capital spending. And in class, we also talk about another way, right? Let's part C1. Part C1. Net capital spending. In class, we said that also equals the change on net fixed assets plus depreciation expense, right? That's another way. And based on our discussion, net capital spending also equals purchase the new assets minus sold existing assets, right? So that's both ways, of course, will lead to the same answer. And that's the way to solve out this sold, because the sold amount here is what the question is asking. So from the first equation here, we can use that equation to figure out net capital spending. So net capital spending equals the change on net fixed assets. So if we go back to the balance sheet, the change on net fixed assets from 2010 to 2011, that's 4548 minus 4548 minus 3857, right? If you go back to that, 3857, just double check, 3857, okay? And then add depreciation expense. It's not the accumulated depreciation, it's a depreciation expense. So we have to look at that number from the income statement. So from here, depreciation is right here. Depreciation is 1010. So that's 10 10. Okay, so now I do need a calculator. So it's 4 5 4 8 minus 3 8 57 plus 10 10. That gives me 1705 1701. So that's the first way to get a net capital spending. And now we need a second way to solve out sold. So because this further equals purchased minus sold. Hence sold equals purchased minus 1701. So now we can plug in the number purchased. Go back to the setup. That's how much? That's 1810. Okay, 1810. So it's 1810 minus 1701. So that gives me basically 109. So that's how much the firm sold in 2010, 2011. 109. And the final part C2. So part C2 is based on all the previous parts. And it's asking what is the cash flow from assets for the year for 2011. And we know that to get the cash flow from assets, CFFA, we have to figure out first operating cash flow, right? And then we have to do two adjustments. First, subtract net working capital, the change on net working capital. So that's, as we said, that stands for the short-term investment. And then subtract net capital spending, and that stands for the long-term investment. So the only part which is not known is the operating cash flow. So we need to figure that part out. Operating cash flow, you know that further equals EBIT, or operating income or operating profit, both refer to the same thing. EBIT minus, plus depreciation expense, right? Because depreciation is not a cash outflow, so we need to add it back. And then minus taxes. The firm has to pay taxes. That's a cash outflow. So from the income statement, go back to the income statement now. We have the sales, cost, depreciation. So from those three numbers, we can figure out EBIT. So EBIT basically is sales minus costs and then minus depreciation. Okay, so and then actually you can, because if you go back to this formula here, that's EBIT, and after EBIT you have to add the depreciation back. And to get EBIT, you subtracted the depreciation, and then you added depreciation back. That means you can actually get the sum of EBIT and the depreciation by only deducting costs from the sales. So that's what I'm gonna do here. So I'm gonna just that equals, just plug in the numbers. I guess it should be clear enough. So it's sales 11,500, cost, that's basically 5,510. 5,510. And then, as we said, the difference between sales and cost basically is this part, EBIT plus depreciation. So then I need to subtract taxes. Taxes is a yeah, there I think we do need a calculation. The question also should tell us the tax rate. So what is the tax rate? Oh, the tax rate here, you see. Let me highlight this part. The tax rate is 35%. So from that information, we can basically figure out the taxes. Uh, we know that taxes, oh, it's really, so let me first leave this as blank here. Let me first get the taxes first. Taxes, we know that equals EBT, right? Earnings before taxes. That's basically my taxable income. And then times tax rate. Tax rate here is 35% based on the setup. So what about EBT? EBT is basically sales minus cost minus depreciation and then minus interest. So we just need to subtract all those numbers from sales. So it's sales 11500 minus 5510 and then minus depreciation. What is depreciation here? Is 1010. Okay. Depreciation here is 1010. 1010. And then interest expense. Interest expense is 180. 180 here. 180. So that's my taxable income and then multiplied by 35%. So then just pull out my calculator. That's 11,500. Oh, one more zero. Minus 5510 minus 1010 minus 180 equals, that's my taxable income, times 35%, 0.35. That gives me taxes, which is $1,680. So now I know the number here. Taxes here is 1,680. Hence my operating cash flow, just plugging all these three numbers into my calculator, we can figure that out. So that's gonna be 11,500, oh, one more zero again, minus 5510, and then minus 1,680 equals. So that gives you 44,310. So now I can just plug in all these three numbers necessary to calculate cash flow from assets or free cash flow. Alright, so operating cash flow, we just did the calculation, 4,310 minus the change on net working capital. We just do the change. We just did the change right here. It's 37. And then net capital spending, that's right here. Oh, where's my pen? Right here. It's 1701 net capital spending. 1701. So now plugging all these numbers into my calculator. Minus, I have that operating cash flow, so just continue that calculation. Minus 37, and then minus 1701. That gives me 2,572. Okay, that's the number. So now get this number back. So it's 2,572. So now check my work to see whether we have got the right answer. Okay, sometimes it's could be a little bit slow. So the first part is right, second part is right, third part is right, and the final part is right too. So okay, so I hope that by using this example, I have been helpful to make you better understand how to solve the questions on the calculation of cash flow from assets and also what we call the free cash flow. That's it for this discussion.